Hello everyone, so myself Saga here. So today we'll be learning about support and resistance, which plays a major role in trading. Okay, not only this, we'll be also learning about trend line and trend line breakout. So let's try to learn on a simpler way so that you understand in a better way. Uh, so let me just try to take an example. You could see out here, okay, this is how normally the market keeps playing within a trend. So normally, you could see that on a certain point, right? Okay, market reaches a certain point and then tries to bounce back. Immediately, the moment it reaches a spot, it tried to bounce back. Again, out here, you could see it bounce back here, and here. So multiple levels are out here. So the moment it reached this level, it tried to bounce back. Similarly, if you see at the downside, right, you could see there are multiple levels out here, 1, 2, and 3 levels, where the market reached this level and immediately trying to bounce back. So basically, when the market tries to trade within a range, right, okay, the upper side, okay, from where the market reaches and try to bounce back, right, this upper side level is called as resistance, okay, and the downside level from where the market tries to reach and then tries to bounce back, right, this downside level is being called as support. So majorly how the support and resistance work is, okay, this is particularly a fight between buyers and sellers. Why the support and resistance plays a major role in trading is, okay, it tries to actually tell you where to enter into the market and where to exit into the market. So you could see that buyers normally get into the market when there is a bull run. Okay, similarly, sellers try to get into the market when there is a bearish trend, which means the market is trying to fall, right? That is where bears try to get in, and bulls try to get in when the markets are going upside, right? So basically, this level which you see, right, okay, this level actually gives us an indication. Once certain market tries to reach this particular level, you could expect a immediate trend reversal. Okay, you could expect an immediate trend reversal where the market can bounce and go back to the previous support or resistance. This is why this plays a major role. Okay, now let's get into the example. The main thing, what is support? Okay, support is a level on a market chart that it bounces off when in a bear trend. Say that an asset is falling, but there is a price that it won't drop beyond. Each time it hits that price, buyers take over and market raises again. So basically, you could see all these people at the top side, right? Okay, this all are sellers. Normally, sellers are trying to push the market towards downside. Out here also and out here also. But once the market reaches a certain point, right, you could see it is not going further down. But what is happening is you could see an immediate reversal. Okay, so from where it is bouncing back, right, this particular spot, okay, is called as support. From this particular spot from where the market started bouncing back, this particular spot is called as support. Similarly, on the resistance, how it acts is, similarly, you could see that top side sellers have been sitting and downside buyers have been sitting. So buyers are trying to push the market towards upside, and on a particular level, okay, market is immediately trying to bounce back. So once it reaches the particular level, it's trying to bounce back. What is actually happening out here is, you could see buyers are trying to push the market with greater force. But once after it reaches this particular level, right, it shows that there are multiple sellers already sitting out in this location, where once after it reaches this particular location, right, sellers are trying to push it with great force. So what happens is, when the buyers tries to push, no matter what, the sellers are trying to get the market backward. That is the reason where the market is unable to break this level and go top. It can only break and go top if the buyers are very strong. Only then it can try to break and go out. For a better example, right, let's say that there are 100 buyers out here who's trying to take the market towards upside, but unfortunately out here there are 150 sellers. So what happens? It is a fight between 100 buyers and 150 sellers. So obviously sellers are going to win, right? So that is how it started pushing the market backward. Again, what happened? Once after it reached a certain point, again a 50 more buyers got into picture, because there were 150 sellers and here it was 100 buyers. So another 50 buyers get into the picture and they try to push with great force. Again, they reach out here, but sellers were more strong. They again tried accumulating and tried to push the market with greater force. So this is how particularly the market works. It is actually a fight between buyers and sellers. The person with greater strength tries to win in the market. This is how a major support and major resistance work. So here you could see why are support and resistance important. Say that lots of traders use support and resistance to help them plan when to enter and when to exit. So this is particularly used to understand when to enter into the trade and when to exit from the trade. You could see out here, this is a major support and this is a major resistance. Say that the market started from here, it reached this particular spot and then tried to bounce back, and from here it reached this particular resistance and then tried to come back. Right now say that I am waiting out here. Okay, exactly, I could see that once the market reaches this location and tried to bounce back. So it is a signal for me that okay, here there are buyers who's been sitting in this location. So ideally what I would do, I would draw a support line out here. So it is an understanding for me, once the market reaches this level, I could expect the market to bounce back once again. So what I would do is, once after the market reaches this particular level, right, I would normally buy a trade. Okay, I would normally enter into the trade and expect the market to go upside till this upper resistance. So I would enter into the trade out here and exit out here. So what happens is, I would have made this middle way as a profit. Say that I entered at 50 rupees and exited at 100 rupees. So that middle 50 rupees is what the profit that I would have made. The reason why I exited out here is, before itself I would have seen that once the market reached this particular level, right, it tried to make immediate V-shaped recovery. So that is a idea for me, which says that over here there are sellers who's been sitting. So I could expect once I reach that location, the sellers might try to push the market backward. So what I do immediately, once I buy out here, the moment the price reaches this location, I would exit from the trade, so that the sellers would try to again push the market towards downside. But this level can be broken if the sellers are weak in this location. If the sellers are weak and if buyers are very strong, right, we could actually break this location and try creating higher highs. Okay, that is how major support and resistance work. You understood, right? All these levels at the top side, people who are sitting at the top side, all the sellers who are sitting on the top side create resistance, and all this buyers who are sitting at the downside try to create support. And now let's try to understand with a better example. So you could see multiple support and resistance out here. You could see a major resistance here, minor support, minor resistance, and major support. Okay, so basically you could see market moving in different types of directions like this. Okay, it can create up higher highs and lower lows. This is how normally a market keeps moving around. So normally all this major support and major resistance, right? Okay, these are the levels where normally all these multiplications of thousands are done. Just give me a moment. Yeah, so basically all this major support and resistance come with the multiplications of thousands. Say that 6,000, let's keep it as 6,000. Okay, this is 6,000 and this is 5,000. Okay, so basically you could see major support and resistance with the multiplications of 500 and thousands. Say that 500, 1,000, 1,500, 2,000, 2,500, 3,000. All these multiplications of 500s and thousands act like major support and resistance. So in middle, right, okay, there would be certain ranges. Let's say that like 5,300. Okay, and let's say 5,600. So these are the levels in the middle. So these levels can also act like support and resistance. Let me just give you an example how to identify that. Okay, say that once right, okay, I would see that the market from here, okay, you could see the market went till this level, and then exactly near 5,300, right, it tried to make a reverse. It tried to bounce back. Once after it reached 5,300, it tried to come back. So ideally what I could understand is, normally there is major resistance out here. Okay, I would immediately draw a trend line out here, because this gives me a confirmation there are little bit sellers who's been sitting in this location. So sometimes I can try to break. If there are greater force by buyers, we could try to break this level and go top. But if the buyers are not very strong, right, sellers can again try to push the market backward. So that is what happened exactly out here. You could see buyers started buying the market out here and they tried going up. But exactly as there was small resistance in 5,300, what happened? The market reached this location and immediately tried to reverse. That is how the market got back and then went up. Exactly, if you see from the top side also, for an example, before the market would have taken a minor support from this level, which is around 5,600 level. Okay, the market would have taken a minor support from this location. So exactly out here, if I would have sold my stocks, right, I know that there is a small support in 5,600. So what I would expect is I would enter the trade out here and exit in this location, because I could make this much amount as profit. Because if I don't exit in this location, right, I would lose out my profit. Some portion of my profit would be lost. That is how we use the support and resistance mainly to understand where to enter and where to exit. So that is the reason mainly this thing has been used. And majorly, as I told you, majorly this multiplications of this 500 and 1000 acts like major support and resistance. So in middle, there might be a minor support and minor resistance, but this won't be very strong enough. But sometimes it can also try to push the market backwards. And to give you another example, right, you could consider this building, you could consider this as a first floor building, second floor building, and a third floor building. Okay, normally in first floor building, right, if you see that, okay, this downside support acts like floor and upside ceiling acts like resistance. This resistance acts like ceiling, right, in a first floor building. So what happens once you go into the second floor? Once you enter the second floor, what happens? This ceiling will start acting as floor for this second floor, right? And this would be the ceiling, right? The same thing when you go into the third floor, what happens is same ceiling will start acting as support, which will act like a floor to this third floor. Similarly is where even the market works. In an uptrend market, right, all the top side that you could see works as resistance in an uptrend move. Okay, similarly on a downtrend move, right, all this downside lines that you see start acting like support. So this is a major thing, how it changes. For a downtrend market, this lines acts like support, and in an uptrend market, this lines acts like resistance. That is the only difference between support and resistance. This is mainly understood to understand where the market can try reversing. And we could see a sharp V-shaped recovery in major support and resistance. And where can you find that major support and resistance? In multiplications of this 1000 and 500. I hope this is clear. Now, a difference between major and minor support and resistance. So it is the same as I explained you. In major support, you could see immediate V-shaped recovery. And in minor resistance, okay, you could see the market reached a particular spot, got back, again reached a particular spot, got back. So ideally what happens is in major support and resistance, right, you could see an immediate V-shaped recovery. But in minor resistance and support, you could see the market consolidating for a longer time. So when I say consolidating, it means the market making a sideways movement. It could make a sideways movement for a longer time in minor support and resistance level. But when it comes to major support and resistance level, it can immediately try showing a bullish move or a bearish move. So this is the difference between minor and major support and resistance. And as I told you, support can act like resistance. So as I gave you an example of that first floor, second floor, and third floor building, so that is a better example for this. Support can act like resistance. And now let's go with a small example. Okay, you could see this is a channel. Okay, normally you could see in this trade, right? Okay, the market is trying to move within this particular channel. It is not trying to break this channel or get out of this channel. It is only trying to move within this channel. So in this channel, what you could find is you could find all this major spot, right, where the market is touching and bouncing back, right? This major spot is called as resistance. This line is actually acting like a resistance. The same way the downside where the market is reaching a particular spot and bouncing back, right? All this particular spot is called as support. So basically why we use this is, why I gave you this example is to just identify when to enter and when to exit. Okay, say that market tried to reach this particular resistance and then try to come back. Right now, I'll be waiting to enter the trade and make some money. So the moment I understood the market is going to try coming back, reach this support and try to bounce back, right? What I would do is I would immediately wait for an entry. So the moment I get entry, what happens? I will enter into the market because I very well know that market is going to bounce from this level and go till this next resistance. So I would immediately take entry out here and make profit till the next resistance. So this is how support and resistance actually helps in you to capture those big profits in life. You could find same thing happened out here also. It went back and it got into this channel, and immediately once after it reached the support, it was an indication that it's going to bounce from here. You could enter and make profit. The same way out here, you could, if the moment you would have taken a trade out here, right, you would have entered out here and made profit till the next resistance. This is how normally people try making profits in the market. Okay, this actually gives us an indication where exactly to enter and where exactly to exit. So this would be our entry point and this would be our exit point. So this is how we make money in the market, by using of support and resistance. So this is again the example that I gave. So you could see that market reached this particular resistance and then tried to bounce back. So immediately the moment it reaches this support level, right, it is an indication. I know that from here the market is going to bounce back till the next resistance. So what I would do, the moment I get a proper indication candle out here, I would make my entry and then take a profit till this level. So that is how I make money. So here also you could see immediately once the market reaches this location, it gave you an indication with a hammer candle. The moment you get indication from the support, you could immediately place an entry out here and then book your profit till the next resistance. So this is how you actually get to know where to enter and where to exit. I hope this is clear for you. Now let's try to understand about trend line. Okay, how does trend line majorly work? So ideally in the market, right, you can find that market tries to trade with a different pattern. So once when you find the market is trying to reach a particular spot and then tries to bounce from a particular spot. So basically what you do is, when you find a place like this where the market is reaching a particular spot and then tries to bounce back. So if you find minimum three connecting points like this, right, you have to just draw a trend line. Okay, you just have to draw a trend line. Once you find a minimum 3 touching points like this, if you draw a trend line out here, right, this is a signal for you to understand again the market might come to the same spot and then bounce back. So as you could see, 1, 2 and 3. Actually here itself there are already here itself there is 3 spots. One was here, and one was here, 3 spots. So the market from here, it tried to bounce and then it got back to this level. So immediately it gives me an idea that, okay, from this level, again, the market can bounce. So what I would do, the moment it reaches this level, I would place my entry out here. I would enter into the market here and then try to book my profit, which would be 1:2. Okay. So normally I will try to book the profit where I can make money in this location. Exactly. You could see again, the market reached this spot. Okay. The fourth touch was out here. It reached this spot and then it again tried to go back. So I could have entered out here and booked my profit till the next level. So minimum, when you draw a trend line, right, minimum you have to find minimum 3 touch points. Only then the trend line is actually valid. And one more thing, you'll have one more question also. That is like whether I should consider this candlestick, right? Okay, when you say to draw trend line, whether the candlestick should be touching the wick or a body. Okay, it should be touching wick or body. So basically, when you draw a trend line, right, it can either touch wick or either touch body. The only thing that you have to make sure is there are multiple touch points on that trend line. That is the main thing that you have to make over. Even if the wick or if the body is touching this trend line, only then it is validated. If it is not touching, then you're not drawing a proper trend line. Okay. Now, this is another example for a trend line breakout. So I'll just try to show you. So basically you could see, okay, market tried to bounce your 1 point, 2 point, and then 3 times. Okay, once there was a 3 touch like this, right? What I would do immediately, I would try to take a, I would immediately, what I would do, I would try to draw a trend line like this. Sorry. Immediately, I would try to draw a trend line like this, so that the moment I saw like this, what I'll do is I'll try to draw a trend line so that this gives me an idea. Okay, the market is gonna come to till this location and then bounce back. So it makes me easy to take entry. So you could see here, once after 1, 2, and 3 touch points, right? In this 4th touch point, it gave me an idea that once after it reaches this location, we could see a bounce back. Either it has to bounce or it has to break. So basically what I would do, once I get a proper entry signal out here, right, I would immediately enter into the market and book this profit. That is how we make money in the market. And you could see again the market went and then it tried to break with greater force. So basically here what was happening is sellers were trying to push the market downwards. Okay, all the spot. But over here, buyers were very strong enough. So what happened? Buyers used to push the market back. Every time it reached this particular trend line, buyers were trying to push the market backwards with greater force. But unfortunately, after a certain moment, right, buyers started becoming weaker. So once after this location, okay, buyers started becoming weaker once after they booked a proper profit. So here what happened? Sellers started accumulating and they started pushing the market with greater force. Once the sellers started pushing the market with greater force, what happened? They pushed it with greater force. So they broke their trend line. So once this trend line was broken, right? Okay, it was an indication that says, okay, right now the market from bullish, it has turned the signal to bearish. Okay, now it is a moment to sell the market from here. So immediately after a breakout, it was a signal for me. It is time to make money downwards. So immediately I could have entered out here and made profit till here. Again, once the market started retesting, okay, it got back again to retest. So once it reached this particular level, right, it was an indication again for me. I could sell the market and make more money. So I would have sold out here and made profit till here. So this is how normally we use breakouts, trend lines, and then support and resistance to ideally identify where to enter, where to exit, and what type of trade to be taken at which moment. Okay, whether we have to take a bullish trade or whether we have to take a bearish trade. This is actually used to identify at what moment what has to be done. If you could master this, right, you could make plenty of money in the market. Okay, the only thing is you'll have to master this. Let's also let's also look into the chart for better clarity as well. Okay, yeah guys, so you could see in Nifty 50, right, over here in one hour time frame, you could see the market reaching a particular spot and then trying to bounce back. This particular spot, right, is called as support, where it reaches this particular spot and then tries to bounce back. And you could see again from here, right, okay, you could see a trend line passing around. So here there is 1 touch, 2 touch, 3, 4, 5, 6, 7 touches. So basically this was a trend line which was being drawn so that I understand once after market reaches this particular location, right, we could immediately expect the market to go down. Again out here, the moment it reached here, it was a signal for me, okay, from here the market is going to go down. So I could have sold out here and made profit till here. So this was actually a trend which was to identify where the market is moving until which level it moves. Okay, ideally if you enter into the market, right, you have to understand where I have to exit. That plays a major role. So if I have entered the market out here, right, I know I have to exit the moment I reach this trend line. So what I would have done immediately, the moment I reach here, I would have exited from the market, because I know that once after it reaches this level, it will try to bounce back again. So this is how we enter into the market and make money. So that is the reason you'll have to master this so that you understand where actually to enter and where actually to exit. You could see everywhere out here. I would have, if you'd have seen my prediction videos, right? Every day I try to explain you where is the market heading and what we could expect, okay, for tomorrow. I keep explaining like that, right? So basically, if you read that, right, you actually understand, okay, what am I trying to say. Okay, every day if you try to watch that, you'll actually understand how is the market working. So you could see out here the market was actually playing within a channel. Okay, it was trying to play within a channel, and out here it tried to break and go out of the channel. So once it broke this channel, what happened? It entered into a second channel. So from here again, this channel was actually first acting as resistance. So once this channel was broken, okay, it started acting as support. Okay, so here you could see the candle took support from here and again bounced back and took resistance from here. And from here, the moment you got a proper entry signal, you could enter and make profit. So this is how normally you make money in the market. It is just used to identify where to enter and where to exit. So you could see all the trades that you see, right? It is all a indication where I entered and where I exited. Okay, so basically if you clearly see, right, you'll understand. Over here there was a resistance, okay, which was a clear-cut idea for me. Once after it reaches here, I could book my profit. So similarly, what I would do, I would enter and I would book my profit. So here you could see it was a trend reversal. Okay, I would have told you once after this major support was broken, I could expect the market to move till the next support. So you could see once after this major support was broken, the market tried reaching till the next support. So that's how I entered out here and booked my profit till here. So again, you could see here also I had told you once after this major resistance level has been broken, we could expect our target till the next resistance. Similarly, once this level was broken, we achieved our target. So here also there was small resistance, but it was not strong enough. So we were able to break through and go till the next resistance. So this is how normally market tries moving on day-to-day basis. Your job is to properly identify where to enter and where to exit. If you could master this, you could easily make plenty of money in the market. So if you do have any kind of doubts or if you wanted to learn, you can also get in touch with me, and we could review on day-to-day basis and help you to become a profitable trader. Thank you.